So in this video, we're going to cover top investing strategies that you can actually use in your 20s as a beginner, whether you are a college student or whether you're someone who just graduated from college. Hello everyone, my name is Nikhil, and in this particular channel, we talk mainly about investing as a beginner. We talk about education or career related topics, and we talk about topics around productivity. So if you're someone who wants to watch more of the future videos, then make sure you do subscribe. Now, quite a lot of you have been reaching out to me on Instagram or on YouTube comment section itself, where you're asking about investing and you want to understand how can you invest your money in your college life. Now, this video is mainly for you guys who are in the early 20s and who wants to start investing right now itself, because the earlier you start investing, the much better it is. I'm sure all of you know about compounding already, because compounding takes time, right? The earlier you start, the much better it is. So without any further ado, let's get on with the video. Now let's actually look in terms of where can you invest your money. Now we have multiple areas that we can invest, and we have multiple levels, right? So we have low risk, we have medium risk, and we have high risk. Now in case of low risk, we have fixed deposit, we have bonds, we have debt funds. In case of medium risk, we have equity mutual fund, we have small case. And in case of high risk, we have equities, which are your stocks, and we have cryptocurrencies. We have not taken into consideration something like real estate or REITs, because the amount of capital or the amount of time required in these spaces is much higher. So all of these investments which we have taken is purely from the two simple factors. The amount of time should be less, and the amount of money required for investing in these areas should also be less, because I know each of you would be in college or you would be just graduating. So we have taken these two into simple consideration. Now, the next big question is, how much money should you actually invest? Now, as someone who is in the 20s, you should at least a bare minimum keep 25% of your income purely for investing. So if you're making 15,000 rupees, a bare minimum of 3,500 rupees you should keep aside for investing purposes. So this entire video, we will be using this 3,500 as the investing amount, right? So make sure whatever your income is or whatever your pocket money is, you keep at least 25% of that purely for investing, and the remaining you spend according to whatever you want. But make sure 25% is kept aside. Now first, let's look into low risk. Now, as someone who is in the 20s, the amount of money which you should be keeping in your low risk bucket should be the least. Now in low risk, we have fixed deposit, we have debt funds, we have bonds. So your fixed deposit is by the banks. Your debt fund is basically by your mutual fund houses, which invest their money into debts like your bonds or treasury bills. So these are the various investing areas which involve very low risk. Now you can invest your small percentage of money, but the amount of money that you should be investing in this particular sector should be very less, because you can actually take much higher risk at a young age. So in total, you should not be investing more than 10 to 15% of your investing amount into low risk bucket. So considering our investing amount right now is about 3,500 rupees, you should not be investing more than 500 rupees into your low risk bucket. Now for debt funds, you can actually look into websites like Grow or Quora. Now none of these websites are sponsored. These are purely websites which I have been using over the last couple of years. So in Grow or Quora, you can look into multiple debt funds which you can actually start investing in form of SIP, which is a systematic investment plan. So that way every month a small amount of money gets deducted from your account and directly goes into this low risk bucket. But make sure you're not investing more than 10 to 15% of it. Now let's actually move on to medium risk. Now in medium risk, we have equity mutual fund and we have small case. Now equity mutual fund is simply a mutual fund which invests your money into equities like stocks. So over here, you will have a fund manager. You will be giving a certain amount of money every month in term of SIP, and the fund manager will be allocating your fund into a stock portfolio, right? So they will be the one who will be investing your money. Now there are different mutual fund houses that you can actually invest in. So you will need to do a little bit more of research. You can invest as less as maybe 150 or 200 rupees, or maybe even 300 rupees to start with. Now there are different websites. I personally use Quora, but you can use Grow as well. So depending on your choice, you can use either of the websites. Now, other than your mutual fund, I would also advise you to invest into small case. Now, small case is a website where you can actually buy a portfolio of stocks or a basket of stocks. And the biggest difference between mutual funds and your small case is that in case of mutual fund, you're actually giving your money to a fund manager. And the fund manager is the one who's actually investing your money wherever they want to invest, and when to invest, they are the ones who are deciding. So you have no ownership. But in case of small case, you are the ones who are actually buying that particular basket. You can customize that particular basket of stocks however you want to invest. or however you want to customize. So you have more ownership over here. So in case of small case, you have multiple different options as well, right? You have, like, for example, you have top 100 stocks. So over here, they give you the ETF of top 100 stocks by their market cap. Or you also have the option to invest in equity and gold, where you can actually invest as less as 300 rupees per month. So this is also an SIP itself, but you have more control. So in your medium risk bucket, I would advise you to invest a bare minimum of 30% of your investing amount. So considering in this video, we have taken an investing amount of 3,500 rupees. So 30% of that will be at least 1,000 rupees every month should be going into your medium risk bucket. And this 1,000 rupees, you can break it between your mutual fund and your small case. And now finally moving on to the high risk bucket. Now in high risk, we have equities, which is your direct investing, and also we have cryptocurrency. So first talking about the equity direct investing. Now this is a great way of investing your money, provided you actually understand which company to invest in. Now there are a lot of companies out there. So you will need to do a little bit of research in terms of understanding whether is that company good, is that company profitable, which sector do they belong to, is that sector performing good, how is the overall market doing, how is the company's past performance been, right? So you will have to do a lot of research, and you will have to go through the fundamental analysis and go through these basic details to understand whether you should be investing into that particular company or not. Now, I do have a video over here where I talk about the top 3 stocks that you can actually invest every month. So you can check out this particular video. And for equity, I would recommend you to use Zerodha, which is one of the best trading platforms in India. And now moving on to cryptocurrencies, right? Now, overall, we have so far used about 45% of our investing amount. We have used 15% in low risk, and we have used 30% in your medium risk. So we are left with 55%. Now this 55% is what we will be using in your high risk. Now in 55%, we will be using 40% for stocks, and we will be using 15% for cryptocurrencies. We will not be using more than 15% for cryptocurrency, purely because cryptocurrency is still at a very early stage, right? So it is very volatile. There's a lot of price fluctuation which happens in case of cryptocurrency. So 15% of the investing amount is what we will be using in case of cryptocurrency. And for cryptocurrency, you can use the website WazirX, which is again a website which I have been using for quite some time, and it's a great website. I also have a video over here where I explain the top 5 cryptocurrencies that you can actually invest right now in today's date. So do check out that particular video as well. So I hope you actually understood how to actually invest your money. So quick summary, you will be saving at least 25% of your monthly income purely for investing purposes. This investing amount, you will be investing into 3 different buckets: low risk, medium risk, and high risk. In low risk, you will be putting at least 15%. In medium risk, you will be putting at least 30% of this investing amount. And in your high risk, you will be putting at least 55% of your investing amount. This 55% will be further divided into 40% for equity and 15% for cryptocurrencies. So I do hope you have actually understood how to diversify your portfolio and how to invest your money in your 20s as a beginner, either in your college student or either as someone who just graduated. So I hope you actually understood and you actually got some value from this particular video. And also, if you're someone who is currently in college or who's starting their college life, I would highly recommend you check out this particular video where I explain the top 6 mistakes which I personally made when I was in my college. Right? So these are top 6 regrets which I personally have, and I would highly recommend you to avoid these. So do check out this video out, and also if you found this video useful, do like it, do subscribe, and I'll see you all in the next video.